Okay, so we need to talk about something that is vitally important. AMC stock having a great day today, up north of 9% right now at the time of recording this video. We have some critical information, some very important information. I think we are probably going to be the first person that says this that you're going to hear out there. Now, I'm subject to be right or wrong. Again, being the first to something is definitely putting yourself out there, but I'm not afraid to do that for you guys because I think you need to know this information. And it really comes down to AI and where capital is flowing in our markets. And not next week, but the week after that, you could see the start of something that could look very good for AMC stock. And we're going to talk about it here in this video. So hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comments section. So first things first, you got to think about what's happening in our markets right now. And I think the best way to actually do this is just look at the percentage of stocks that are above their 50-day moving average. About 52%. That's it. Stocks hit a new all-time high today. Now, back in October, November, you were sitting at about 20% of stocks above their 50-day moving average. You rallied to 80%, and then you fell all the way back to 45%. You have seen a 50% retracement from the highs. That is big, right? You would expect to see the markets actually in a place of weakness right now based on this chart. Like if you looked at this chart and you had no idea what the markets had been doing, let's say you were knowledgeable on markets, you would look at this chart and you would say, yeah, that's probably what the S&P looks like as well, because that's what you would expect. The average stock barely being above its 50-day moving average, that would imply you've seen some downside. Indeed, that's not what happened with the S&P 500 hitting a new all-time high today. It's quite the opposite, right? But it's actually not, because you're not seeing the markets broadly participating. It's really just a handful of names that are pushing stocks to all-time highs. It is your AI names. Now, these are names like NVIDIA, SMCI, ARM, that just went up 50+% following their earnings, which was yesterday. These are stocks that remotely incorporate AI that have benefited from it. Google, Amazon, Apple, Microsoft, the biggest stocks in the markets with the largest weighting in the S&P 500. Now, I think that's pretty well understood. The average stock has not been doing much, definitely to start 2024. It's called breadth. There hasn't been a lot of breadth in our markets. The breadth has been bad, very, very bad. Now, I think you guys understand that. But why is this happening? Well, you can no longer make the argument that if we head into a recession, well, you want to be in big tech. You can't make that argument anymore because it looks like we're not heading into a recession. Consensus is we're not heading into a recession. So I don't think that makes sense as an argument to why there's bad breadth in our markets. The only thing that makes sense to me is there's not money that is coming into our markets right now. Money is not like rushing into stocks. There's $6.2 trillion sitting in money market funds. So money is not coming back into our markets from external sources. Sure, can there be some inflows on a day-by-day basis? Of course, but it's not like the Rona, where the Fed was cutting rates and you basically had to put your money into stocks. It wasn't like, it's not like people have all of this excess money. They're all learning about markets right now and they're all putting their money into markets. That's not what's happening, okay? So there's very little outside inflows into stocks right now. If anything, stocks have seen outflows over the last couple of years, and that money has went into bond markets like money market funds. And we've covered this quite a few times here on this channel. It is quite redundant, I know, for a lot of you guys that actually watch these videos every single day. Money market funds sitting with about $6.2 trillion in them. Just for a little bit of context here, I mean 6.2 trillion, that's like 2 apples. But this is 3 times the money that is currently in the Russell 2000. So you could buy the Russell 2000 3 times over and still have a little bit left to work with this $6.2 trillion currently in money market funds. So this eventually will be a big source of boost for your average stock for the broader markets. And this would likely bring in some breath into our markets if we did see $6.2 trillion start to get deployed into our markets. I think that's later on when the Fed actually starts to cut rates, and probably in mid 2025, would I say, this money actually could make its way into our markets. Right now, the money market fund yields are way too good. So what's happening? Why is breath bad? There's no way to explain it besides this. If you're a hedge fund or institution, you have to be kind of benchmarked to the S&P 500 to some degree or another, right? You can't have the S&P give you 20% gains last year, and if you're a hedge fund or institution, you return 10%. Your clients are going to look at you sideways and start to pull out their money. You got to at least benchmark the S&P 500. So what's been happening? These AI stocks have become larger portions of the S&P 500. So as these stocks have become larger portions of the S&P 500, the S&P itself has had to buy, let's say, NVIDIA for that matter. S&P has had to buy a lot of NVIDIA as NVIDIA's prices went higher, as the percentage of the S&P has, grown into more NVIDIA, right? If NVIDIA went from 1.5% to 3%, S&P had to double their position in NVIDIA. So that brings in buying pressure. But I think the main gist of it is if you are a hedge fund or institutional investor and all of these stocks are going crazy, AI is the next big thing, and NVIDIA has went from 100 to 700, SMCI has went from 20 to 700 in the last, year or 18 months, that is pretty easy to sell to your clients. If you are a fund that is investing in those AI names, it's pretty easy to sell your fund, right? Comparatively to something like an AMC. Who the hell wants to own AMC or Tesla or Fubo or any of these other stocks, PayPal, that has not done anything or has done poorly over the last couple of years when NVIDIA went from $100 to $700? So almost by just pure, almost like coercion, hedge funds and institutions, they have to allocate more and more to NVIDIA and ARM and SMCI because they don't want to lose clients. So with that backdrop in mind, you're not seeing inflows to our markets. So how are they buying these stocks? They're selling other stocks. And they're buying your AI names. That's, I guess, the simplest way to put it. They're selling a Tesla. They're selling a Fubo. They're selling a Dollar General. They're selling a Crocs. They're selling a Snapchat. And they're buying NVIDIA, SMCI, ARM, Microsoft, Google, Amazon. These stocks that are remotely tied to or directly tied to AI and semiconductors. Let me show you a little bit of proof. Now, you can actually see this, I think, the clearest based on February 6th. Now, February 6th for the markets was a mediocre day, a 0.29% day. You were green, but not by much. AMC was up 10.9%. You actually hit a low, your multi-year low, all-time low of $3.58 per share. And then AMC rebounded and rallied about 11%. Very impressive day. NVIDIA on February 6th was actually down about 4% at one point. Ended up closing the day down 1.6%. Now, look at something like a Tesla. Tesla on February 6th was up 2.23%. Now, if you know anything about Tesla recently, 2.2% in the green is pretty much unheard of for Tesla these days. Tesla, you can point out really any stock let's see Twilio. Let's see the correlation here. And I don't even know. I'm just pulling stocks up. Yeah. See, wasn't much of a correlation there, but definitely not as bad as it has been for that stock. The stock was pretty much flat. The day before that, it was down about 2.3%. I think you could pretty much point out any stock, really, for that matter. See, PayPal. PayPal's a great example. Look at that. On February 6th, PayPal was up 3.53%. 3.53%. That is a big move these days for PayPal. Big move for PayPal. So I think it's very clear in that regard that people are just selling your non-AI names and buying your AI names, like in NVIDIA. Now, here's where we get into what I expect to be happening next. Now, NVIDIA is having another face ripper day today, up 3%. Kind of insane at about $720 per share. Pretty soon this thing's going to be $1,000 per share. But, it's probably not going to happen soon, because NVIDIA tends to do this almost like clockwork. They tend to rally into earnings and then sell off after earnings, after, a gap up or whatnot. 3 earnings ago, when NVIDIA really shocked the world with, AI revenue and really that big guide up, NVIDIA stock was up 24% that day. And what happened? You went up another 3 days, but then you ended up falling about 11% over the next week following that. And then you kind of trended up again, trended down again. You ran up into earnings 2 times ago. And remember this day? I know some of you guys probably remember this day. It was another huge quarter from NVIDIA. Big beats, top, bottom line, margins, everything was rock solid, stellar earnings. NVIDIA has had stellar earnings, 3 earnings in a row. NVIDIA also gave you a massive guide up, but this time it was a little bit more expected. NVIDIA the day after earnings actually only closed positive 0.10%. You actually were up 10%. This was a big candle. This was a 10%er. 10% gain the next day, but then you ended up falling, and then you fell the next day about 2.5%. Then you rallied back to where you were. But from that peak following NVIDIA's earnings, you ended up falling about 17% over the course of the next 2 to 3 weeks. What about last earnings? Well, last earnings, you were actually red the next day. And a lot of people were like, how is that even happening if NVIDIA just smashed earnings and raised guidance again? It's because you almost cannot please investors when you've seen this kind of parabolic rally in the stock. But even last time, the stock ended up falling about 11% again following their last earnings. So if that were to happen again, NVIDIA would fall. So if NVIDIA does fall now and funds can or don't have to be as allocated to NVIDIA, that money that leaves NVIDIA is probably going to expand into other areas of our markets. Now, NVIDIA reports earnings, I believe, on February 23rd. So that's not going to be this upcoming week. That's going to be the week after, the 21st. Apologies. That is going to be on Wednesday. About 2 weeks from now, about 12 days from now, NVIDIA will report earnings. So that's when you could see a broadening out of this market. That's where you could see your average stocks start to do better. And I would imagine that would mean AMC could also start to do better as well. Because again, there's not money coming into our markets. Money is just moving in our markets. It's moved from other stocks to NVIDIA, to SMCI. And with NVIDIA earnings, likely a sell-off that will ensue after NVIDIA earnings, that would probably mean SMCI. That would mean other stocks that have even just reported earnings, like ARM, that did well on their earnings. Now, I'm not expecting NVIDIA to do bad by any means. I think NVIDIA is going to give you another blowout quarter with blowout guidance, but it's not enough to cause the stock to rally another 10 or 20% like you have seen some of these other stocks rally after earnings, just because it's such a big weighting now. The stock is $1.7 trillion of market cap. After today, it's probably 1.8 trillion. Another 20% from here, you're going to be over $2 trillion in market cap in NVIDIA. That is a lot of money. That is the equivalent of the Russell 2000. So could NVIDIA somehow rally, another 20%? Of course. It seems unlikely to me, and I think that is the blueprint on when you might see the markets actually expand here. Now some people are going to say, wouldn't that just mean if NVIDIA sold off, probably the index would sell off and stocks would do poorly, right? Because if big tech sells off, the index will do poorly. Potentially, but I think it would be really a tale of two stories, right? I think you would see that outperformance of the Russell. I think you would see the rest of the markets participating. Although they don't have the largest weight in the markets, I think they would kind of counteract each other, right? If the top 10 stocks, let's call it, are selling off, but 490 other stocks in the S&P are going higher, you probably counteract each other as far as the index itself. So I really don't think there's a huge trade on the S&P or the NASDAQ based on NVIDIA earnings. Maybe in the NASDAQ, but it's really just a trade on the broader index. If anything, going calls on IWM could make some sense here, or calls on individual names, even like an AMC. Let me know what you think about this information down below in the comments section. Now, let's get into a little bit of what happened today with AMC stock. AMC stock is currently up about 6%. You do have option activity today that was pretty dang bullish as well. 7 orders totaling $181,000 with a positive order value of 59%. So decently bullish there. And call volume of 76.83%. Put volume of 23.17%. Now, if you take a look at these short interest numbers, you do have short interest percentage of free float at 12.05%, $123.5 million worth of short positions currently in AMC stock. Days to cover 1.64, 30.2 million shares that are currently sold short. Shares out on loan 34.28 million. Cost to borrow 1.08%. Utilization of about 51% and a short score of 64.03 out of 100. Cost to borrow max at about 2%. Some shorting activity, but not a whole lot of shorting activity. You could definitely be seeing more as of right now. If you look at the Stocko tracker data, it appears as if about 19,000 calls are going to expire in the money, 58,000 calls expire out the money. In the money puts at about 8,000, out the money puts at about 22,000. So some decent option activity there. 10-year treasury yields flat on the day today at 4.17%. We've also seen recently there has been very little correlation between what the treasury market is doing, what 10-year treasuries are doing, and what the broader markets are doing. Under the surface, as 10-year treasury yields have been rising, stocks may be getting weaker, but not on the index level, because it's all about AI. It's all about keeping clients. It's all about, pulling money out of average stocks into AI names. That's what's happening. That has been 2024. That's why your average stock peaked out on December 28th. If you look at the percentage stocks above their 50-day moving average, that peaked out on December 28th as well. But the index has went way higher since then, because it's all been fueled by big tech and AI. Notably NVIDIA, SMCI, now ARM, AMD, stocks like that. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.